We're just about set up. We are set up. What a rebound. Let's talk about this. Is it going to stick around? Hey there. I'm Mitch Goldberg, your host. You're watching Be the Boss of Your Money. The show is all about helping you acquire the knowledge, the skills, the tools to take control of your finances, of your personal finance. You can do cost cutting, whatever. If you don't have the right personal finance behavior, it's not going to really matter. That's what the show is all about. So let's get into it. Let's talk about the market today, because that's what's on the tip of everybody's tongue. What the heck is going on with the stock market? Got a lot going on, and let's roll the quick intro. I want to make this a good show. I want to be known for brevity today. Okay, rotation back into the reopening stocks, tech stocks, the hot ones from the pandemic continue to be a source of funds for rotation stocks. I've been hot on that trail for a long time. I am still hot on that trail. And here we go. All right. Thank you so much for joining me. If you're just tuning in now, I'm Mitch Goldberg. We're just getting started. We're talking about the big rebound today. So happy Monday. Not a bad way to start off the week. And Dow flew up today. S&P had a pretty strong day. NASDAQ was on the weaker side for a change. Usually when markets go up, NASDAQ leads the way because of tech. And there are so many things related to tech that we just can't lump all of technology together. Do you think in terms of like let's see, do you think in terms of Amazon and Google and Microsoft in the same grouping as Zoom or DoorDash or Peloton? I know I don't. So I don't think about those in the same way at all. So just let's have a lot of alerts popping up here, and I've got to figure out how to turn them off because it's really annoying. Sorry about that. So that's what we're going to do. We're going to continue this. This is a continuation of what's been going on for the last few weeks. What I've been talking about is, are we in a bear market for part of the market, a stealth bear market? You wouldn't know we're in a bear market because the NASDAQ is only off 6% from its all-time high. And the other averages, the Dow and the S&P, the other ones that we watch, are not off even that much from their high. But you take a look at a lot of stocks, it shows you how, in spite of the NASDAQ being up 22 or 23%, in spite of the S&P 500 being up 22 or 23%, there are an awful lot of people who are licking wounds right now, because if you bought in the last couple of months and you bought individual stocks, there's a really good chance that you are down quite a bit, unless maybe you bought some Apple or Microsoft. Those stand out as two that are up, and they help pull everything up with them. So, by the way, you see these social media icons here. Okay, that is Instagram, YouTube, LinkedIn, Facebook, whatever your preferred platform is. I'm on Twitter as well, but I used to be a Twitter bug, but I hardly ever go on Twitter. I just don't get the same joy that I used to get from it. So I hardly ever go on it. So let's take a quick look at the markets. I'm going to set this up nice and neat for you. So while I'm going through this, if you have questions, you want to talk about something, words of wisdom, words of encouragement, hit me up in the comments right now. Don't be bashful. Give it a thumbs up maybe, or a heart, or a wow, or a celebrate, one of those reactions that you click on depending on which platform you are watching from. This way I'll see you, and it's always more fun that way. But today was an extraordinary day, but it's just, another big up day. Before I say it's just another big up day, let me explain what I mean. Okay. Thank you, Eric. Eric, I see you, man. Thank you very much, Eric Hagan. Follow him on LinkedIn, by the way. He's a financial advisor and in Minnesota, and he puts out a lot of really smart, very thought out, and meaningful content. So follow Eric Hagan. So I, what I always tell you is I don't like these giant rebounds, the up 500, up 600, up 800 point days, because they get repealed really easily. And then they're just followed by another big down day. And it's just like after a while, it's heartbreaking. In the last like 6 or 7 trading days, a week ago, a week and 2 Fridays ago, we saw the Dow go down over 900 points. And then it rallied a little bit on Monday up like 200 something points. Then we had another 600 down day and 500 and then up a little. And today up 600 some odd points. This is what we are seeing. Some people find this scary, but the reason for the volatility is, I mean, aside from the fact that, oh, yeah, volatility is normal, it's part of the game. The reason we're seeing all the volatility, though, is because the street is investors. Well, when I say the street, I mean Wall Street, but investors are getting ready for a new policy regime in terms of the Federal Reserve. There's really not much the Fed could do to keep liquidity going into the market, except for maybe more bond buying. But that's become unnecessary, which is the feeling of most investment professionals, including myself. They don't need to keep buying bonds. So it's a new regime. The Fed has been trying to jack up inflation and take care of the stock market since the Great Recession ended in 2009. It's been a long time, and we have to get to a new regime where the Fed is no longer fighting deflation, but now it's fighting inflation, and it's just a different word, inflation, deflation, but it is huge in terms of ramifications. So if you want to know what's happening now you know, and the market has to adjust to this. It's going to take a long time, and that's where we get the volatility. And the market has to figure out what it wants to ride up and what it wants to get rid of. So let's take a quick look here. All right. Dow was up. I don't know if you can see that. You should be able to see that on your small smartphone screen that all you guys are watching from. Dow up 600, just about 650, up 1.87%. NASDAQ up 0.93, under 1%. S&P up 1.17%. Gold was off a little bit. Gold has never been screaming inflation this whole time. And that's what gets me is like, why isn't gold screaming inflation? Why isn't it soaring above like $2,400 an ounce? And I just don't see it. Obviously, none of us see it because it's not doing it. But maybe gold and oil down to 69. Remember, it was in the 80s a few weeks ago. Maybe they're telling us that we do see inflation coming down. We do see supply chains loosening up, getting fixed. And we've been talking about that. They are the Baltic Dry Index, which is an index that tracks the cost of shipping by sea. By the way, you can't invest directly into an index like the S&P 500, but you could invest in a security that tracks or mimics an index, okay? But oil and gold are not screaming inflation right now. The 10-year treasury yield at 1.4% is not screaming inflation. The VIX came down below 30, down 3.5 points. We really need to see the VIX get below 20 to have any meaningful shot at new highs, in my opinion. The market's losing a lot of energy with a lot of the tech stocks and crypto, which we have to talk about crypto because that just got crushed over the weekend. And the Russ 2K up 2 points. And that is the most sensitive to the economy. The Russell 2000 index has been getting hit the hardest. So today it had the biggest rebound. Actually, I shouldn't say that's been getting hit the hardest. The NASDAQ has been getting hit the hardest, but then the Russell 2000. But nice rebound over there. And I want to take a look at crypto. Let's get to cryptocurrency. That's not what I wanted. Yeah, it shouldn't be so hard. All right. You with me, guys? Still okay? So Crypto rebounded a little bit up to 450, but it hit bear market territory down 20% from its high. Um, I still pick on. Well, let's take a look at Ethereum up a little bit. Actually, Ethereum's had a pretty nice bounce back. Litecoin, nice bounce back. We'll look at Doge. Doge, holy cow, Doge! I didn't realize it was down this much, down to 18 cents. That's been like 25 cents, 30 cents, but really 25 cents for such a long time now. It's 18 cents. 25 to 18 is a pretty nice sized dip. And the reason I always pick on it is because this is the one that Elon Musk was touting. He was, touting it on Twitter. He was telling people to buy it. You should look at Doge. And I was like pissed. I did a whole live stream about it and a couple of short video takes because it's like he can afford to take risk. He's one of the wealthiest people in the whole world. But he has a certain amount of investor sophistication, and not everybody who listens to him is a sophisticated investor. So people hear Elon Musk talk about something, and these people could risk money that they shouldn't be risking, or that they don't really understand the risks they're taking. I get a little miffed when people start touting something so speculative. Like as a financial advisor, and I follow certain guidelines and certain industry rules, I can't tout something like that because I don't know who's listening to me. It's got to be a one-on-one conversation, not just broadcasting buy Doge or not buy Doge. But Doge is a joke of a crypto, and I feel bad that people lost money on it because they listened to Elon Musk, who is in a completely different economic level than anyone who listens to him. I mean, how many people are in his socioeconomic level, right? 2 people in the whole world, Bezos, Buffett. I mean, Gates. There's very few people who are on his level. All right. So let's get back to what we're talking about. All right. And I want to show you I want to show you this. Oh, this is juicy because this was on just at CNBC a little while ago. Okay. Patty Dom. I've met her before. She's really nice. Okay. So sell off in risky tech stocks feels like, let me say that again. Sell off in risky tech stocks feels a lot like the 2000 bubble and may not be over yet. Have you heard anybody talking about this, pounding the desk ad nauseum? Yeah, me. I've been talking about this for weeks, and I want to give you some. I want to show you some of my watch lists, and this is really, really telling. So just stay with me. Stay with me. I see a few of you out there. Don't go away. Don't you go away and hit me up with questions or, thumbs up or whatever. Say hello in the comments. Say, hey, Mitch, what's up, man? How you feeling? All right. Let me show you what I'm talking about. Okay, let's first take a look at the Corona list. Okay. Moderna down over $40 a share. This is up big last week, and it's down big this week, but almost 500 to 265. So this is well into bear market territory. This is in like disaster zone. Peloton 171 down to it went out at 42 today. That is a disaster. Okay, that is, no matter how you slice it, down 80%. Domino's holding up okay. Clorox got crushed 231 down to 168. Campbell Soup 53 down to 41. These are pandemic stocks, your pantry stocks and tech stocks that allowed you to work from home or stay at home during the pandemic, the ones that got crushed. But the most famous pandemic stock of all, is Zoom Video, 451 down to 185. Activision has some internal problems, a sexual harassment issue and corporate governance issues, but still 104 to 56. Roku 490 to 200, down by more than half. DoorDash 257 to 161. Do you see that we are in a severe, I'm talking truly severe, bear market? And this reminds me of the year 2000 because you saw a lot of stocks getting cracked. But then you look at the NASDAQ like now, it's only down 6% from its high. Okay. Disney 203 to 150. So that's over 25% loss down there. And DocuSign 314 to 143. You look at how much these stocks have come down. I mean, in the history of bear markets, this is like the second worst one I've ever seen. The worst one was Again, the tech wreck of 2000. And I'm not done. I'm not done with this. I want to get back to it, a couple of other lists that you need to see because I'm putting it in perspective. I'm going to show you what's working. Also, it's not all just doom and gloom. Okay, and let's look at the meme stocks, the memers. All right, you see this red line here, how it's mostly red. GameStop, it's mostly red. Bed Bath and Beyond, mostly red. Costco, mostly red. Clover, Wendy's, and people are going to keep buying these. I have a feeling that people look at Hood, Robinhood, 85 to 21, lost over 75% from its peak. So all these people ran and got excited about it. It's like crazy how these things have come down. And that's what I mean. And then people keep buying them. And the whole way down for Robinhood, people just kept buying them. And I'm like, enough already. Just fish in another pond. There's volatility and there's loss. The volatility are the general ups and downs of the market. And if you have to sell when there's downward volatility, you could be faced with taking a loss. And it's just too bad. That's why us financial advisors say raise money, raise cash well ahead of needing it. So if the market does go down, you won't be forced into selling into a down market. But these companies that are down so much, my own opinion is if you from the highs, that's lost. These companies, in my opinion, are not going back to their old highs unless we go into another total, complete lockdown in the economy. I don't think that's happening. I'm betting everything that that's not happening. We're not going back into our caves again. We're not going into like February, March, April, and May of 2020. That's not happening. And DocuSign was the biggest disaster on last Friday, and they didn't just miss earnings expectations. They missed earnings expectations drastically, and they came out and said, "Yeah, our business has slowed down way more than we expected with the economy reopening." Now, DocuSign is a stock that I've covered before in the show, and I thought of any of these stocks, DocuSign would hold up the best, and it was holding up the best of these work-from-home, stay-at-home pandemic stocks until Friday, and now it just joined the club. So it's just another disaster. And people keep going back to these. They'll buy Hood, they'll buy Clover again, and then these stocks could have a rip-roaring rally that makes them look good because if a $5 stock goes up $2, it's a lot percentage-wise, and then they just go back down. I really think that we are in a year 2000 epic blow-up in this portion of the market. Now, does it spread to the bigger companies? Because people are saying, I'm hiding out in Google. No, I'm not in, Peloton. It's the same stocks we talk about all the time. I'm not in these work from home, stay at home stocks. I'm in Facebook. Well, Facebook, just to show you, is down a lot also. Yeah, let's see how much Facebook is down. Facebook. Facebook, 384 down to 318. That's bear market territory. That's over 20%. So, one by one, these are getting taken out. And right now we're all relying on Apple and Microsoft to hold up the market. In the meantime, Apple did have such great news last week, maybe a slowdown on some of their products, or they can't manufacture enough of them, whatever it is. I'd rather a company have a slowdown because they can't manufacture enough of their products as opposed to demand too low for their products. And that's two totally different kinds of problems. Okay. I want to take a look at a new watch list. So this is brand new. Maybe we should do an introduction. I'm trying to think of an introduction here. We'll do a quick little round of applause for a new list on my watch list. Okay. And bear with me. I know I'm jumping around on my screen. I'm trying not to make you nauseous for moving the cursor around so fast, but I also want to save some time here. Crypto stocks. What are crypto stocks? These are crypto stocks, or stocks that are involved in one way or another with either trading crypto, or storing crypto, or just holding on to crypto. So we already talked about Robinhood, down from 85 to 20. Oh my God, it's crazy how much. And I think it came out at like $38. So it's still crushed, even if you bought it on the IPO. You're still just crushed. So don't you like go, oh, I didn't get it at 85. You're still done. Everyone is done. The stock's right at its low. Coinbase. Okay, look at that. Coinbase, I think, is the quintessential gateway stock to crypto. Square, which is now called Block, by the way, but now they accept and trade crypto and whatnot. Look at that. Look at all that red over here. See that red? I made my cursor green so you could see it better. Can you see it better? And look at MicroStrategy, 1,315 down to 596. So that's down by half, more than half. All right. So this is what I mean. Like, I keep harping on it. And someone said to me, "Oh, Mitch, you're just being negative. Stocks are a great hedge against inflation." Yeah. So people are saying I'm being negative, and that how could I be negative? Stocks are such a great hedge against inflation, and you want to own stocks for the long term. You have to just hold on to them for the long term to even out the up and down volatility over time. I'm totally into that. I actually posted that on all my social media channels today: LinkedIn, Facebook, Instagram. Totally into that. I mean, I'm not negative. I'm not a bear. What I'm telling you is, this section of the market, I am negative. I am a bear, and obviously you could see why, because they're all bear market territory. What's worse than bear market? Like, we need a different animal. We have bull markets that are up, bear markets that are down a lot. What's worse than like a bear? Like, does it have to be a mammal? I'm trying to think. Are we in a wolf market? I don't know. What's that animal? Wolverine. Are we in like a Wolverine market? The animal that is not afraid of anything, right? It's one of my favorite animals, a Wolverine. I never want to meet a Wolverine face to face, but one of the things that a Wolverine does when it fights you is for males, it goes after a male animal's balls. I don't know if you knew that. So you don't want to you don't want to meet up with one of these critters. Okay, that's what they do. Nasty animals. Was that TMI? But I'm just telling you about the truth about how the animal fights. I mean, I'm not being like inappropriate or anything. Me inappropriate? No, never. I would never be inappropriate. That's like having a toilet flush for a sound effect. There must be a bathroom next door. All right, so yeah, that's really about it. So let's get into what's working now. The rotation, which falters and then doesn't falter. Where you go from the work from home tech stocks, tech related kind of stocks, companies that allowed you to work and stay at home, into reopening stocks, hotel, travel and leisure, industrials. And we started getting into that. And then they came off with the Delta surge and they started going up. And then they came down again with Omicron. And now they're going up again. I think that continues. I think it continues. And I think that the type of stocks that I just showed you are, those work from home, stay at home stocks, are going to continue to be a source of new money. And the big mistake I saw in 2000, and the tech wreck went from 2000 to 2003. It wasn't like a 1 day or a 1 week or 1 month event. It went on for years. People kept buying the same stocks. What they should have done is gone into other kinds of stocks. Don't keep averaging down. Every time Kathy Wood, who's fund manager for the ARK Innovation Fund and the ARK family of funds, every time these stocks get crushed, she goes, "Oh, I'm buying that one. I'm buying more." Like with such bravado, I'm buying more of this. I've never met her. I'm sure she's a lovely individual, and people do meet her, say they like her. So I'm not knocking, just saying, as an investment strategy, for most of you to keep buying these stocks on the way down is probably not the best idea, because most people don't have the risk tolerance to keep loading up on these stocks, which, even though they're down, they're still incredibly highly valued. And that doesn't make sense for most investors, maybe to a small degree. But if you have a small amount of them, you probably have a full plate of them already. All right. So what's working? Industrials. And let's just, we might as well take a look at what worked today. Okay. So bear with me. I'm going to show you what really, what worked today. Look at market movers. All right. Norwegian Cruise Lines up almost 10%. United Airlines, Royal, all travel. American Airlines, you see Carnival, Las Vegas Sands, Caesars. I'm not a huge fan of owning the casino stocks just because I feel like they just, to me, they're sometimes too volatile. Airlines, it took me a long time to get comfortable with airlines, and I am comfortable with airline stocks. Moderna, let's look what lost. Moderna, Pfizer, these are the pandemic stocks. AMD was down. By the way, you notice that AMD and Nvidia were down. Nvidia was down 2%. Network appliance, net app, Thermo Fisher was one of those pandemic stocks. So it's just the rotation continues, and I want you to be cognizant that the mistake I saw in the past, and if you don't know what history was, you'll repeat it. The bad parts. It seems like whenever we repeat history, we repeat the bad parts of history, not the good parts of history. I don't want you to just keep averaging down on these stocks that are getting crushed, because one day you're going to get the bottom, and the good news is going to come out. The earnings are going to crush it, and they're going to go all the way back up. If you think these stocks like Zoom or Clover, so many of these names, Peloton, if you think these are going all the way back up in rapid fashion to their former all-time highs, think again. You're talking about hundreds or thousands, almost 400% gains rapidly. And that's what people are betting on, because investors have gotten to a big extent, to a large extent, especially newer investors have gotten so spoiled that they're used to making quick money. I think what's happening right now is for a whole generation of new investors, the Robin Hoodies, that's kind of just a generalization of people who are new to the market. They took their stimulus money, they were trading. I think this is the first time you guys and girls have ever seen such a bear market in stocks. So the $64 trillion question is, does the bear market we're seeing now in this cohort of stocks spill over into the rest of the market, like what happened in the year 2000? That remains to be seen, yet to be determined. So we can't make a call on that. But what I am saying is, in this market, the general strategy is this, and I'll sum it up. This is like the best thing I could come up with. The best thing that you could do. The best thing that you could do. Just want to hit up all my camera angles here, okay? The best thing you could do is not so much figure out which stocks to average down in or which stocks to bottom fish in. Figure out which stocks that you are comfortable, or asset classes, or exchange traded funds, or mutual funds, whatever it is. Figure out which investments in your portfolio that you are comfortable writing down. So, and again, instead of figuring out what you could bottom fish on, because I think right now that's a really risky thing to do. It's always a risky thing to do, but it's even crazier today. Instead of bottom fishing, figure out what are you comfortable holding even in a down market, because you're confident it'll recover. That's the name of the game right now. And you might be thinking, well, why don't you just get out of everything? We don't know if everything's going to go down. And if you do get out of everything, the trouble is now you have to get back into everything. And then what happens is the market goes down and you're like, oh, I'm glad I'm not in. I'm not getting in. It's going lower. Then the market goes up and you say, I could have had everything lower. I'll just wait till it goes down again. And then it goes down and you think, oh, it's going to keep going down. And then it goes back up and you go, oh, I could have had it when it was lower. And it's just back and forth and it becomes endless procrastination. Are you an investor? This whole time, have you been an investor during this bull market for the last year and a half, since the bear market caused by the pandemic ended? Or are you just somebody who is enjoying the rally and you figured you must be an investor because you're making money in the stock market up until now? You have to make that decision, and I highly suggest you make that decision very, very quickly. I'm Mitch Goldberg. You're watching Be the Boss of Your Money. I want to thank you for watching, and I will see you back here tomorrow. Have a great night.